Welcome back to Trading Strategy number 3, day 50. Today we are going to take a short break from our lessons on trend lines. We are going to discuss an important concept. The video will be longer than normal. Please make sure you review this video several times. On day 48 you learned, first you need to find trading strategy number 3. Then you find where to draw a trend line. This brings us to the important concept, the phases of a trade. Understanding this is important. Why? It can help you have the patience to wait to enter the market for the time when you have the best advantage over the market. The first phase of a trade is when the trade is developing. Most people can recognize something that is about to happen before it actually happens. Normally, we use this ability to see something developing to protect ourselves or benefit ourselves. For example, we use this ability to protect ourselves when we cross a busy street, and we use this ability to benefit ourselves by trying to get something before anyone else does. All of us have the ability to see something developing and take action. However, it is this ability that we naturally use to protect and benefit ourselves that can ruin our trading. It is this ability that causes traders to just jump into trades and lose lots of money. Noticing that something is developing does not mean that it is time to take action. Understanding the second phase of a trade will also help prevent you from just jumping into trades. The second phase of a trade is when the trade is actually set up. In this phase, all of the criteria for your trade are in place. This phase is also a little dangerous to traders. Why? Because traders see their high probability trade set up and do not want to miss something. Making money is that something, so they just enter the trade. Just entering a trade when the trade is in the setup phase is just as dangerous as entering a trade during the developing phase of a trade. The third phase of a trade will also help prevent you from just jumping into the market. The third phase of a trade is when the setup trade actually triggers. This phase confirms that it is time for you to enter the market. Remember, confirmed does not always mean the trade will be profitable. The phases of a trade are developing, setup, and triggered, or when you enter the trade. You have spent enough time recognizing trading strategy number 3 that you should be able to see it beginning to develop. You should also be able to perfectly identify that trading strategy number 3 is set up. What you will learn about trend lines will help you successfully know when your trade is triggered or confirmed for entry. This video was longer than normal, but not too bad, right? Please review this video several times, and I'll see you in tomorrow's lesson.